Ladies and gentlemen, Matthews here from the Forex Traders. I hope you're doing great. I'm here with 5 ways to avoid having FOMO while trading Forex. So stick around and watch the rest of the video. Alright, the first one is you must have a proper proven trading plan, right? So having a well-defined trading plan is crucial to avoid fear of missing out, which is FOMO. You should plan specific entry and exit criteria, risk management guidelines, and clear trading strategy. By following your plan consistently, you are less likely to chase trades due to FOMO and you avoid missing out on trades, right? So it's very common that most of us don't have a proper trading plan. People just come to this industry thinking they can just gamble all the way to success. Unfortunately, it doesn't work like that. You need to have a proper plan in place, right? You need to have it written down, follow it consistently, because if you don't do that, you're going to end up like the 95% that are consistently losing money in the market. So what is it supposed to have? Like I've already said, make sure your strategy or your trading plan tells you when you're supposed to execute a particular trade, what you're looking for exactly in the market, the confirmation candles, where you're supposed to put your stop loss, where you're supposed to put your take profit, where you're supposed to when you're supposed to move your stop loss to break even, and how you're supposed to manage a running trade. What amount of capital are you supposed to be risking per trade? Your system is supposed to tell you all that, because there's not supposed to be any room for guesswork in this industry. That's if you want to be like the 10% that are able to make money consistently in the market. So you must have a trading plan, or you can call it a strategy, right? So whatever it is, make sure you have it. And if you don't have it, the first link in the description gives you that access to our M&F Mastery course, which comes with everything that we've talked about right now. Number 2, set realistic expectations, right? Understand that you won't catch every trading setup that you're going to have in the market. The market is open 24/5. There are always going to be opportunities for trading. Set realistic expectations for yourself and accept that you won't be able to participate in every potential trade. And by acknowledging this fact, you can reduce the fear of missing out on potential trades, right? So the market is open, like I've said, 5 days a week. There's going to be endless potential setups you can trade. Guess what? You're going to miss most of them, because unless you're telling me you're going to be on the charts the whole day, which is not ideal, and which is not even advised, right? So you understand that you're going to miss out some of the trades and you won't catch all the moves. So it's important for you to have that clear mindset as you're coming to trading, and so that you can have those expectations. Because if you have unrealistic expectations, for example, you have a specific amount of money that you want to make a day, which is very unrealistic, in such a way that the market doesn't that the market works in terms of probability, and you'll never be able to know when you're going to make money in the market. So the market works in such a way that it's probability based, right? So you can have the right setup right here, everything can be made, but you can still lose. So you have to come with the right mindset, where you are really not expected to make money now, but over a series of trades. That's going to save you a lot. So come with realistic expectations. Understand that it's not going to be easy. You have to put in work, and when you understand that, it will be easy for you to be able to remain consistent executing your strategy, because you understand that it's going to fall in place at the end of the day. So make sure you have right expectations as you're coming to the market. If you have unrealistic expectations, you're going to be disappointed most of the time, and that's going to lead to revenge trading and trading a lot, over trading, and a lot of things which can cause you to blow an account. So make sure you are aware of that and you're coming with a right mindset. All right. The third one is focus on quality, not quantity. So instead of you constantly seeking for new trading opportunities, focus on the quality of your trades. Look for high probability setups that aligning with your trading strategy and offer a favorable risk reward ratio. By prioritizing quality over quantity, you'll be able to select more quality trades and avoid jumping into trades because of fear of missing out, like I've said already. So quality over quantity, right? It's really, really important. So personally, what I do is that I trade over 30 pairs, right? What I do is that a previous night, I'm going to actually go through all my currency pairs that I trade. I screen through, I'll analyze those particular pairs and those that meet my criteria. Most of the times that out of 30, I'll probably have 5 or 7 trades I'm going to be looking at that particular day, right? Therefore, I'm searching for those opportunities. I'm waiting for those opportunities to actually come to my entry levels. And once the market comes to that level, I'll be able to execute. The fact that I analyze over 30 pairs doesn't mean that I trade 30 pairs at a time. No. What simply means that I'm screening over 30 pairs in order for me to come up with my watch list, which is between 2 to 5, 7 pairs on that particular day or on that particular week, so that I'm not stressing myself by looking at a lot of trades at one particular time. So it's really, really important that you have such kind of a mindset. It's going to save you a lot. You can't be trading all the major pairs because it's just going to stress you. So make sure that you are focusing on a few pairs, and also make sure that you have a high probability setups like we do when we're always looking for that particular setup. And once the currency pair has that particular setup, we analyze it and we put it as on our watch list. We set alerts and we just wait for the price to come to our level, and that's how we do it. So I also encourage you guys to actually do that right there. And then number 4 is avoid impulsive trading decisions. Fomo often leads to impulsive trading decisions, which can be detrimental to your trading success. Avoid spontaneous trades based solely on fear of missing out, or stick to your trading plan and only execute these trades that meet your criteria. I'm sure you've done this as well in the past, right? You see the market going up, you tell to yourself, I'm missing out, right? This is going to the moon. Let me jump into this particular trade and jump in. And the moment it just jumping into a particular trade, guess what happens? The market starts to reverse, right? The market is going down, and you say to yourself, I want to be part of this big move right here. So let me just jump in. You pump in size, you take a lot of you put so much on that particular trade, and you hope it's going to actually go in your direction. Guess what? It reverses as always, right? So it's because you are having FOMO. However, if you know what you're looking for in the market, it's going to be very difficult for you to trade because the market is going up, or to trade when the market is going down. You're going to stick to your strategy and only wait for those criteria to be made. And once that has happened, you are going to take the trade, right? Knowing in advance that the outcome of any individual trade is going to be random, so you just focus on executing because that's the only thing that you have control over. You and I have no control over what's going to happen at the end of the day. So when you come with that kind of a mindset, it will be very difficult for you to have FOMO, and you're going to avoid taking bad trades because of that. All right, so don't take impulsive trades. Wait for all your setups to be made. If you're left out, if the market has actually left you, it's okay. Wait for another opportunity, because there's always going to be opportunities every day, every week. So don't worry about a missed trade, because one missed trade is nothing in the long term, right? And the 5th and last one is practice patience and discipline. Man, patience and discipline is the most important aspect of trading, because without these fundamental virtues, you can't make it in this industry, right? So patience and discipline are key traits of successful traders. Understand that the market will present various opportunities over time. It's crucial to wait for the right setups and avoid acting on impulse, and practice patience in waiting for the best setups to align with your trading plan, and discipline yourself to stick to your plan and avoid getting caught up in the fear of missing out. All right, patience. Like I've told you already, we analyze about 30 pairs, and I have to do that almost on a daily basis for me to come up with my watch list, right? And then once I've done that, I'll have to wait for the market to come to my area. I have to wait for the right confirmations before taking the particular trade, and then all that you need for you to do that is patience. You need to develop the patience so that you can avoid losing money unnecessarily. All right, so another way patience applies in trading is that you can see the market just almost touching your level, right? and you know that for you to execute a particular trade, the market has to come into your area, right? Your area of value. It has to come into that POI. But because you are impatient, you enter a particular trade before it actually comes to your entry level. Guess what? The market drops a little bit, but guess what? It goes up again and taps into the zone, and you're back in you are in negative because you are impatient, right? And then when that happens, then you get taken out, and after that, the market actually now drops in a direction. That's very, very common. I read a quote one day. It said it's better to wish to have been in a trade than to wish to never have been in a trade, right? So you take a trade, it goes against you, you wish you didn't take that particular trade. If you were patient, you were going to actually get that particular trade and would have gone in your favor, rather than wishing you didn't enter a particular trade, but now because you are running into a loss, a big loss, because your stop loss was just too far and you had Fomo and you get hit. That's not a wise thing for you to do as a aspiring forex trader who wants to be a consistently profitable trader. So make sure that you avoid FOMO, have patience, wait for the price to come to your level, and wait for your entry signals and execute. Discipline is the most important aspect of trading, right? Because it takes a lot of discipline for you to analyze 30 pairs a day. Go through all the 30 pairs looking for your setup. It takes an immense amount of discipline for you to do that. And also, it requires a lot of discipline for you to watch the market going in profit, taking you back into negatives, and going back in profit, and waiting for it to actually go all the way to take profit. That takes a lot of discipline and willpower. Unfortunately, most people don't have that. Hence, the 90 to 95% are constantly losing money in the market. So in order for you to actually achieve that, you need discipline and patience. These are the most important aspects of trading and emotional control at the end of the day. These are the things that are going to help you succeed in trading if you want to be a consistently profitable trader in the market. Remember, trading is a marathon, not a sprint. Consistency, discipline, and a well-executed plan are far more important than trying to catch every trade. So be smart, wait for your confirmations, wait for your trading plan to be made, wait for all the criteria that you look for, that you back tested and that has shown that your strategy works. Wait for all those things to be made before you execute that setup right there, because you know that that's what's going to make you a consistently profitable trader that you want to become. All right, I hope you found value in this video. If you have, make sure to subscribe, like the video, comment in the comment section. Until next time, goodbye.